one of your top risks for next year. Number two, the United States and China find common ground. Clearly not your base case, Steve, but how does this go and go right?
Well, I think both sides would like to have a bit of a timeout. After the last tumultuous 3 years of, trade encounters and, geopolitical and face-offs on the political side, I think the Biden administration would like a bit of time to figure out what engagement with China is appropriate, what issues are fundamental and that they're really going to have to face off against them. Similarly, China, look, they want to develop their domestic economy. They have, ambitions on technology. The trade war has been a distraction that they haven't welcomed, and they probably would like to have a bit of time in which relations were calmer.
The US dollar in all of this, Steve, pretty clear read across as to what might happen with the global economy, the relationships between the two countries. If it goes right, weaker dollar, mainly driven by risk appetite. Steve, one of the takeaways, though, for 2020 has to be dollar dominance. It had its test, and it passed with flying colours, didn't it, Steve?
Well, I think that's an issue for much of the world, right? That right now, a weak dollar is good for the world. It's excellent for the world because it eases funding conditions in emerging markets. It's the best foreign aid policy you can imagine. I think that on a trading basis, the dollar's importance is probably falling. It's not falling as far as financial markets are. But I think, if you are China, you want to be somewhat independent of the USD payment system. You want to develop your own sort of financial markets. But it is the case that if there is a crisis, people will buy dollars because so much is funded in dollars. Right now, there's no way of avoiding that.
Just a final question for me, Steve, on the US dollar. The dollar bottomed in the spring of 2018 after a year of synchronized global growth. The dollar index now is basically exactly where it was back then. How do we get that next leg lower?
Well, look, I think there's more to come, and I think that the Fed Chair Powell sort of was indicating that they're going to be expanding the balance sheet. Long-term rates will be low. We don't think it's over yet. We think that it's going to, this may be the start of a multi-year dollar weakness is the risk. It would take a lot of good news to get U.S. real interest rates anywhere close to where they were before the COVID crisis. And until we get there, U.S. demand is strong, U.S. real interest rates are weak. It's kind of a formula for a weaker dollar.